Great. Well, great to be back at NPC, and I think thanks Ravi for the introduction. And I think just to build on that, when I was on the other side of the river at Harvard studying case studies, we had Divya actually, creating a case study and creating a story for a case study. And I think what we want to do today is really kind of help unravel his journey. And before I start that discussion, I just want to get a show of hands on how many of you in the audience have seen the movie The Social Network? Excellent.
Not bad.
So I can just tell you that I've known Divya for a few years now. First, actually in Bangalore when he visited me at my office at Indo-US Venture Partners, and I will tell you that his real kind of journey and story is a whole lot more interesting than what you've seen on film. So I think we'll hopefully try and unravel a little bit of that today. And to kick that off, I want to just share with you what I think is just a phenomenal story and background. So just to kind of quickly highlight to you Divya's background, he's the current CEO and co-founder of SumZero, a New York-based startup. He's previously co-founded Harvard Connection, which was later named ConnectU, which some of you I'm sure are familiar with. He did that along with his roommates Cameron and Tyler Winklevoss, known as the Winklevoss twins. He graduated in 2004 with a degree in applied mathematics from Harvard College. After which he joined the M&A team at CSFB as an analyst in New York, and then he followed that up with a stint at Sowood Capital, a $3.5 billion hedge fund in Boston. This was simultaneously, by the way, during his lengthy lawsuit with Facebook, which I actually was shocked to hear today that it ran for 8 years. So it began in 2004, and that crazy journey ended in 2012, so not too long ago. And also during that time, he completed his JD at the Northwestern School of Law and his MBA from the Kellogg School of Management. So it's an interesting conversation that he and I had earlier today, and I was just thinking, I'm like, geez, both of us have been to some of the same schools. We're both from the U.S., East Coast, West Coast, and despite being a decade older, I'm still following in his footsteps. So what's up with that? So excellent. So I did want to kick this off, Divya. Tell us a little bit about, in terms of your family, right? You grew up in New York. You're the eldest son of 2 immigrant doctors, and kind of how has that helped shape you in kind of your entrepreneurial journey when you started off at Harvard?
Yeah, my parents have been a pretty interesting influence in my life. So, I was born in the Bronx, spent my early childhood in Queens, had a very slow, kind of uneventful childhood. Played sports, was pretty active academically, obviously. My parents were about as traditional as Indian parents, I think, get. I think for them, like my mother, for example, skipped 2 grades growing up, and she was huge student. Got married when she was 22 or 23. Very much into maths and science and all of that. And then became doctors. So, sort of checked every stereotype of what an Indian should do. And the thought of pursuing business was so far from, I think, the way they were raised that, when I started talking to them about my, aspirations in college, it was completely out of left field. And I think their risk appetite was probably not anything like my own. But I think I picked up a lot of the work ethic and just kind of the, I think the approach, being disciplined and all that from my parents.
What was the reaction when you gave them a call and said, hey, I'm doing a startup, I'm in my, junior year of college?
Yeah, for them it was do you have any idea what you're doing, And I had no business experience, obviously, in college. I actually not only had no business experience, there's no finance classes at Harvard, so I had no accounting, no finance. My internships were kind of, so-so. I didn't do the traditional Goldman Sachs, summer internship or anything like that. So I was very green, but I think at the end of the day that sort of helped me because, in a way, ignorance is bliss sometimes, and I was kind of maybe more willing to, try something different, not necessarily knowing all the pitfalls. At that time, this was December of 2002. There were a lot of networks, be it MySpace, Friendster. There were dating websites that were starting to become quite popular, and I started thinking about kind of the social problems I was having as a student, just interacting with folks either in my dorm, across campus, at other schools in Boston. Boston actually has 50 colleges within 50 square miles. So though there is interaction between them, it's not it's not a seamless kind of type of social environment. And it just made a lot of sense. Like, why not build a network for the university? And if it can work at Harvard, it should be able to work at any school. Wasn't a programmer, so I kind of needed to figure out how to go about actually building the idea. And at that time, like, unlike as Ravi was saying, there was no sort of ambiance of entrepreneurship on campus. I mean, I could count on my left hand the number of other students who were pursuing entrepreneurial activity, and 3 of them were the twins and Mark Zuckerberg. So it was like there weren't that many people who were, I think, willing to kind of put their schoolwork aside and do something entrepreneurial. So the process of actually finding engineers was a complex and challenging process.
Sure, absolutely. And what was, when you think back let's go back to 2003.
Yeah.
What was a spark that led you to say, okay, I want to launch Connect You? I mean, you guys, I don't know if you're familiar, but it was, within 10 days of the actual launch that you guys had, like, there were 8,000.
Of Facebook's launch.
Well, I'm talking about, for Facebook. But what led you to get to a point where you said, this is a need that I just have to actually do something about?
Yeah, it was kind of a no-brainer for me. And the main sort of insight that I had was, the fact that you could, in a very low-tech and cheap way, verify the membership of the community by just looking at their email addresses. So just knowing that someone had a harvard.edu address meant that they were part of the Harvard community, whether they were a student or an alumni. And that little insight differentiated, Harvard Connection from all these other websites out there. And it was, for me, very clear that this would scale. And so it didn't surprise me that when Facebook launched, they had literally, I don't know, 70% of the entire campus, both undergraduate and graduate, on the website in less than 2 weeks. And so, that sort of virality is, I think, a pretty important characteristic of social networks, especially good social networks. And so, when we sort of were thinking about what our options were in February of 2004 when Facebook launched, at least it was kind of clear to me that it wasn't going to be launching a competitor. We sort of lost that first mover advantage, and then litigation was really our only resort, and so that's the avenue that we pursued. I sort of filed away what had happened and just started, I got a job like everyone else, and started building kind of a separate career and moved on from there.
Sure. So let's fast forward a little bit. Still in 2003, I guess it was around November, and this is the momentous occasion of you and the Winklevoss twins saying, hey, we want to reach out to Mark. What was that like? What was that first meeting like? Just if you can share with us, what was that first interaction like? He was a sophomore, I believe. You were a senior.
That's right. So Mark was actually introduced to me through the brother of a guy who is a friend of mine from the class of 2004. So it was actually an Indian kid, this guy, Aditya Sanghvi. His brother, Saurabh Sanghvi, was 2 years below me. He was Mark's classmate. And by that point, we had gone through 3 different developers. And none of them could actually bring this vision to justice. So he was like, why don't you talk to Mark? He's got an entrepreneurial background and he codes. You should reach out to him. So Cameron and I actually reached out to him in the fall of 2003. And the interaction was, he was very excited about kind of what we were doing. But because he wasn't like a friend of ours, it was kind of basically an outsider. The chemistry wasn't quite the same as it was with the rest of us. And so I didn't really think too much about it because at that point in time I was like very much focused on, just let's get this out, let's get this website out. It's been kind of in the works for long enough. We've lost all this time. We're going to graduate. We want to launch it while we're still in school.
Sure.
And we sort of, I think, overlooked some of those, some of that chemistry that I think anytime like an entrepreneur is starting to build a team, that the founder chemistry is so important, right? I mean, like, having a really good feeling about the people you're working with is something that I think is very crucial, and if anything, is worth slowing down the process to get that chemistry right.
And Mark, I think, at least from the way the movie depicted it, was more of a quiet, more introverted individual. So perhaps not too many ways to diligence.
And like in college, I mean, keep in mind, like we were pretty young, right? So that was like one of the most awkward periods of my life. I mean, I think we were all like lacking in experience in a lot of different ways.
Sure.
But we can talk about that some other time. Yeah.
So knowing what you know now, right? Let's be, I guess, reflective for a moment. If knowing what you know now, what would you have done differently?
Yeah. I mean, the biggest takeaway for me was just trusting my instincts, and I feel like life is short. Work with people who you get along with, and people who are nice. That's kind of, I think the most important thing. There were a lot of other things that I think I've experienced just as an entrepreneur that have been useful, but
sure.
I think some people ask me like, well, now that you're starting a new business, like, do you have everybody sign NDAs? Do you have do you throttle progress with legal documentation, and do you have a lawyer on every phone call? And like the answer is absolutely not, right? I think most entrepreneurs they tend to be fairly resource strapped, short on time and resources, and so I think kind of making the process too much of a bureaucracy in a way is really not the right way to go. And but I think there's a balanced approach that makes more sense. And a lot of it just comes down to, I think, people judgment, and a lot of the softer skills that they don't actually teach you in school, but really come in handy when you're in a business context.
Would you again, looking back, if you knew how to code, you probably wouldn't have made that initial contact with Mark anyway, right?
Biggest regret of my life, not knowing how to code. Yeah. But anyway, I think I have a lot to be. I feel fortunate. To have experienced all of this, and now I can hire engineers. So hopefully that does the job.
Exactly. Now, I think when you look at entrepreneurs in general, I guess there's a general tendency for them to be more closed, secretive, guarded. How do you what's your advice to entrepreneurs here in the audience in terms of balancing that notion with also sharing enough to actually build the excitement among co-founders and the team?
Yeah.
So what's the right balance in terms of what you share and what you don't?
I would say, before you go and talk about your business, know what your competitive advantages are, right? For a business concept where first mover advantage is really important, it probably makes a lot of sense to be fairly quiet about, or at least very thoughtful about who you talk to, what their track records are, and just really assess to what degree you trust that person.
Sure.
After a certain point, I think, especially after you launch, your best defense is offense, right? It's building a great product, building a great user experience. If you can take advantage of network effects, any business that sort of becomes stronger as a function of the size of its customers or users, that's a really powerful force. We've had numerous companies try to replicate SumZero very unsuccessfully because we've sort of built a brand already, and we have a meaningful portion of the industry that we target already using our website.
Sure.
And all that sort of plays into how I think open you can be when you're talking to somebody new, or you're talking to partners, or you're talking to VCs.
Right. Let's talk a little bit about SumZero. I think one way that I've heard it characterized is almost like the Facebook, but for Wall Street, right, or for the buy side. And so how would maybe you can just share some thoughts around what SumZero is and what led you to start SumZero?
Yeah, I guess the analogy to Facebook is, one, it's a social network. Two, like the original version of Facebook, it's a vetted community, but to a far greater degree. So maybe I should probably give some background on the industry that we operate in. At least in the U.S., Wall Street, so Goldman Sachs, Morgan Stanley, UBS, Credit Suisse, Citigroup, all these banks. One of the things that they provide are research services, right? So if you are an investor, let's say you're an analyst at a hedge fund or a mutual fund, or even an individual investor, if you can have access to Wall Street research, and so somebody from Goldman will say, okay, I really like Twitter stock, and they'll put a recommendation on Twitter stock price. They'll say, we think Twitter is worth $50 a share. They'll provide backup and analysis around why they believe what they're recommending. But the problem with Wall Street research is that analyst actually has no skin in the game. He's not even allowed to hold shares of the company that he's recommending, right? Now, what that means is that if you, the investor, take on that recommendation, you buy those shares, and then that stock drops, you lose money. The analyst at Goldman doesn't really impact his P&L. And secondly, all of these banks are typically recommending their own clients, their own investment banking clients, which presents this enormous conflict of interest. So when I started SumZero, the vision was really to take on and disrupt Wall Street research as a whole, and to do so by creating a community, not of Wall Street professionals, but investment professionals who actually work at investment funds, so hedge funds, mutual funds, prop trading desks, and even PE funds to some degree. The challenge was, how do we get these people on the investment side who are not paid to publish research to actually publish their research and open their kimonos and be transparent about what they actually do for a living? And that was I think kind of a tough nut to crack. And we sort of took a multi-pronged approach at it. So one of the concepts that we leverage at SumZero, which I think drives engagement and drives really kind of high quality idea flow on SumZero, is this notion of reciprocity. So once you're a member of SumZero, we actually say to all our members, look, if you want access to the research of your peers, post an idea of your own, and then by doing so, you'll get 6 months of access, and then you'll lose that access until you post again.
Right.
And so the dynamic at play is that the bigger the database gets, the more compelling it is to contribute to.
And you have about 10,000 now on your platform?
So right now we have about 10,000 members from around the world. Most of them are in the US, but we do have members in the financial markets around the world, be it London or Mumbai or Hong Kong, places like that. And the other thing that we've really tried to do, again, to incent people to be more transparent, is to allow them to use SumZero to build their own brands and track records. So for example, there's a job vault on SumZero, right? If you're a member and you're looking for a job at a fund, you can actually apply through our job vault. But what we say to our members is, look, it's not sufficient for you to just provide a resume. You also have to provide research. And so what that does is, it sort of causes an increase in high quality idea flow and content flowing through the site. It gives the employer something to look at other than just, hey, did you go to Wharton or MIT or something? But how do you actually think about investing? Sure. And they're able to not only see the idea, they're able to see the returns on, of that idea. They can see the performance of that idea. And the whole site, in a way, we've sort of turned into almost like a game, where the people who have the best ideas, where those ideas float to the surface, members can rank each other's ideas on various metrics. Returns are very, sort of transparently displayed, so you can see who the best analysts are. In fact, we recently did an analysis which the Wall Street Journal published about which schools produce the best analysts. It was kind of funny, like UVA, which is a great school, came in first. Harvard came in 16th, which people found kind of interesting. So we've created this like meritocracy that people can take advantage of. They can use it to get jobs. They can use it to help raise capital for their funds.
It's very interesting. Again, I think it's playing in the whole kind of social network space to some extent. And it's interesting, I guess, to note that the Winklevoss twins are investors in SumZero. So you've kind of continued that journey with them. Yeah.
It's interesting. We sort of, obviously in college we had this relationship, and then they went off and started rowing. They went to Beijing in 2008. I like started in finance as a bit of a slave at Credit Suisse, and then went off to a hedge fund, and then I was doing graduate school. But when I was in school, I was like a lot of you who are in school or recent graduates, like sort of thinking about like how what do I want to do with my life, and was sort of thinking about SumZero, like, is this a full-time career for me, or is this sort of a side project that I would just do for fun? And so I actually spent school kind of both growing SumZero organically and also thinking about fundraising as well. So I ended up raising about $1.3 million in funding for SumZero as a student. Part of it was out of necessity because I kept finding myself running out of cash. I'd sort of put all of my savings in the business, and that ran out faster than I'd planned. So I realized that I kind of needed to raise some capital. The twins retired from rowing at about the same time that I was finishing up with graduate school.
Sure.
So I talked to a bunch of VCs. I talked to a couple family offices, and I sort of took the opposite approach of kind of what you see now, which is a lot of crowdfunding, where people are taking capital from 50 different individuals or companies. We basically have 4 investors, the twins being the largest. And in June of 2012, we closed our round. I graduated and moved back to New York. And initially, we were actually in their office, building the business. And now we have our own office. But For them, I think it was kind of a nice. It was one kind of their first venture capital investment.
Sure.
Since the whole Connect You
Right.
story. But two, because it was me that they were
Yeah.
investing in, it was kind of a
Yeah.
PR moment for them as
No,
well.
they've known you for so long.
Yeah.
Have either they or you maintained any kind of, what should I say, relationship or connect with Mark? What's that relationship been
No,
like,
no.
if at all?
I think Tyler ran into Dustin Moskowitz at Burning Man this past summer and hugged it out with him. But
Yeah.
but no, I mean we're kind of all doing our own thing at this point. I mean
Right.
they're focused on investing. I'm focused on SumZero. Mark's obviously, I don't know. We all know what Mark's up to. And yeah, I think everyone's kind of forged their own path.
Right, right. When we look at kind of all these aspiring entrepreneurs here in the audience, what would you, I guess, in terms of any kind of advice based on your experience being a young entrepreneur that you could offer?
Yeah. So one thing I would say, this gets back to founder issues. I think founder issues are so common. I mean, you read about some of them. Most of them you don't read about because there are just so many companies out there that don't work or they flame out. And one of the reasons is, for example, like if you have a team where maybe you have 3 co-founders and then one of them decides that he doesn't want to work with the business full time, but he has a quarter of the equity of the business, is that a sustainable kind of structure? Is that a fair way to compensate the whole team? In my case, when I started SumZero, me and my co-founder just kind of agreed up front, hey, we're going to split this half and half. And as I was going to graduate school, as I was kind of in school, it sort of became clear to me that he was not going to be working with me full time on SumZero because he was, his hedge fund career was kind of skyrocketing and he was making a lot of money. So it's very difficult, I think, if you're making a ton of money to kind of give it all up and then make nothing working at a startup, even if you have a big stake in it. So it took us 8 months to renegotiate our equity in SumZero. And in fact, the discrepancy between our shares, given our contributions, was kind of a major hurdle for us in terms of raising capital. So I don't even think we would have been able to close our Series A if we hadn't kind of come up with a more fair structure for our equity split. So I mean, one thing I would definitely recommend is for all you starting companies with co-founders, put yourselves on vesting schedules up front, so you don't feel like you're going to end up in a situation where somebody's sitting on more stock than they deserve very early on in the business. I mean, it can definitely prevent. It causes all kinds of problems, but it'll certainly prevent you from raising any sort of venture funding if that's something you're going for.
Right. You've been coming to India now for a few years. What are your observations on what you'd like to see if you were to come back, let's say, a year from now, based on what you've seen of the kind of the ecosystem here? What are some of the changes you'd like to see?
I'm not by any means an India expert, but my general view, and maybe this is a little bit biased by my upbringing, is there's a lot of risk aversion. I mean, even now, obviously, there's more money coming into India day by day, but my general view that it's your biggest risk is kind of not taking risks, right? If you're kind of sitting around, seeing kind of things go by and not doing the work to kind of get up to speed and really become an expert in an area and be an innovator, that's kind of the biggest career risk you can take. And I would say a lot of people kind of operate under the assumption that, if I work at a really big company, or if I go work at McKinsey, or if I go work at a Goldman, or if I go work at I don't know, a Google or something of that order, that my career is set and that I've got, I'm on the path to success. In reality, the biggest companies tend to have enormous amounts of employee churn. And frankly, I feel a lot safer kind of at my company with 10 people than I did when I was at Credit Suisse, where we had 20,000
Right.
employees. And a lot of that just has to do with the fact that the banking industry is under enormous pressure across the board from technology, right? Whether it's trading commissions going down or, I don't know, kind of high frequency trade. There's so many things that are putting pressure on a lot of the big businesses that a lot of times you're actually better off leaving and doing something independent once you feel like you've built, an expertise in an area where you can actually innovate.
Sure, sure. You know, it's interesting. You went and pursued a JD MBA, which many folks don't, right? Some folks don't even pursue an MBA, but you did a joint degree. What was that experience like? Do you look back and is that part and parcel, due to the journey that you had with Facebook and going down and pursuing a JD and
So I would sit on these conference calls at the age of 22, 23, 24, and with attorneys who were getting paid $1,000 an hour, not understanding anything they were saying, right?
Yeah.
Like I didn't know what summary judgment was. I didn't know what a 12v6 motion was. I just had no clue what was going